Thank you, Mr. Speaker.
I recognise the Honourable Clayton Cosgrove.
And I recognise you too, sir.
Well done.
Thank you. Look, I'll take a relatively brief comment. I'm sure we all recognise you actually, sir, given the venerable status you have. Building on Mr Bennett's comments. Look, on a serious note, Labor will support the Taxation, International Investment and Remedial Matters Bill. It is, as we know, this bill builds on the recent changes to the tax treatment of international investments. And like other members who've spoken, obviously we are in favour of simplification and making it easier for companies to grow their revenues and to increase their capacities. It also aligns the rules relating to the Foreign Investment Fund, or as it's known, FIF, income with the current method for calculating attributed controlled foreign company income. But we do want to raise, and we did in the commentary, Labor members did raise a concern in respect of the approved issuer levy. And those concerns are regarding the removal of the approved issuer levy on payments of interest on securities meeting certain requirements as notified under the Act. Now, one of the issues we want to raise in respect of this is there is a concern that relates to a further erosion of the tax base associated with financial transactions at a time, as we know, as the government has forecast, of falling government revenue. Now, in public session on the Finance and Expenditure Committee earlier this week, we heard from IRD and others, and there seemed to, and other submitters on a number of issues. But there seemed to be a theme running through some of the submissions that the government is, of course, in sort of dash for cash mode. Whether it's cutting and slashing government department capacity and services, or trying to screw extra cash out of various other entities and agencies, they are in sort of clawback mode. We know why, because they have to fund, the borrowings, and they're borrowing why, because they've given a small percentage of New Zealanders right at the top of the stack a large tax cut. Now, all that means is that this government is chasing revenue like the billy-goat. Everywhere there is revenue, they want to drag it in. And the concern that we raise, we support the bill, the concern that we raise is that this move in terms of the removal of the approved issuer levy may indeed erode a falling and reducing government revenue base. Now, we were advised by a number of submitters that the proposals outlined in the bill would not help increase liquidity or reduce interest rates or add depth to our capital markets. And I know that the Prime Minister has waxed eloquently about wanting to increase the depth of our capital markets. That he spins is part of the line or the alibi for promoting asset sales, that somehow these partial asset sales will add depth to our markets, will give opportunities for investment. You've heard it all, etc., 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 when we know exactly what will happen in respect of those assets, that they will fall offshore, and that the returns that are made, at least on the 49% of those assets, will not flow into the coffers of the Crown, and that is important for New Zealanders because those resources can then be deployed to provide the social services we need. They will flow offshore. So at a time when the tax base is reducing, at a time when the government seeks to grab every bit of revenue it can, there is a concern that this move may simply add to that. In addition, our side of the fence are concerned that in some cases the current tax system already effectively contains a lower tax burden on offshore sources of capital relevant to the tax on domestic savings, thereby providing an undesirable incentive for funds to be sourced offshore rather than being retained or saved domestically. And I think that is a valid point to raise. Surely one of the objectives is for companies to retain capital onshore, to save capital onshore and utilise that here. Now, we're in sort of uncharted waters with some of this stuff. There are a number of international obligations here, but I think, again, it is worth raising those concerns. Our side of the fence believe that there is a need for further work on this issue to improve the neutrality of the tax treatment of capital across domestic and international sources and sourcing. So we, of course, are for simplification. We are for providing an environment where companies can grow and prosper and, of course, invest internationally. But we think this is one area where I think the government should have done some more work, done some more in-depth analysis, at least to allay, I think, the fears of a number of us in this House. And I come back to it again. If there is a further erosion of the tax base, do we have projections on that? I wasn't on the committee at the time, but at a time when government's sort of out there with the rake trying to rake up everything that looks like a dollar, then one wonders whether this is a potential risk. So we support this bill. We note that companies, both domestically and those who are showing a ton of guts actually to move, not to move, but to expand their operations and pursue markets offshore to expand their domestic capacity. We applaud that, but what we want to see is we want to see those companies growing and prospering here, but also, of course, paying the fair share. I think it's worth, when we're dealing with these bills, to note with a degree of pride that we have some of the most innovative companies in the world. And we have companies who are small in their number and their capacity, but are some of the most creative in the globe. So it is appropriate that we do what we can to assist, to align, to make it easier to do business and expand markets internationally and assist. And we should pay tribute to those companies. I was in business once for a short period in my life. Probably the best lesson I learned was that if you're in business, it's the one area where if you don't work, you don't eat. And you're totally reliant on your own capabilities. We are lucky in that we get a paycheck every second Thursday or whenever it is. And, whether we're any good at it or whether we, sit on our chuffs or do the work, the taxpayer's generous enough to pay us. When you're a small business or when you're a sole trader or you're a business, you're risking your own shirt. Again, we have the privilege in government when we were there, and now these folk are there, of risking everybody else's money on their behalf and utilising everybody else's money on their behalf. When you're in business, as we know, you're risking your own shirt. And I know that there are members across the country who have innovative business people who have shed a lot of sweat to get where they are or to try to maintain the number of employees they have in exceptionally difficult times. And as I say, the best lesson I learned in life was you don't work, you don't get out of bed, and you don't keep your eye navigating the business through. You don't eat, you don't get paid, because it's all up to the business person. And they do risk a lot. And they are the ones, of course, who put bread and butter on the table of the employees. Governments can knock down roadblocks. Governments can assist. Sometimes governments create roadblocks. But at the end of the day, businesses create jobs, companies create wealth. What we must ensure is that everybody pays their fair share. But it is worth, I think, at these times when we're sort of passing tax bills, and I know companies will sort of stare at it, especially smaller businesses, and go, oh no, more compliance, more stuff we've got to sort of, keep our eye on or get up to speed on. And every time you're getting up to speed on more government compliance, of course, you're not behind the counter growing the business, you're behind the desk almost doing the government's work. So it is appropriate, I think, as we deal with these taxation bills, that we do acknowledge the contribution of business. Labor will support the bill.
Mr. Speaker.
I call the honourable member Todd McLeod.